Hey guys, what's going on? Today I'm going to show you how I enter trades. Do I sell cash secure puts? When to sell covered calls? And a quick portfolio update as well. So we're going to start with the update since it's quick. Today we're pretty flat on the day, slightly down. Tesla fell, so my cash secure put is slightly down. Still not worried about it. I will gladly take assignment at 205 if I have to. Think that's a decent, fair price for Tesla. And then I can start selling covered calls on it if I do get assigned. If not, it will expire worthless, and I will collect the remaining $311. And with the SoFi puts, we are still $1.14 out of the money. I'm collecting the premium day by day. We're up $48 total. There's still $160 to collect. And I will also gladly take ownership of these shares at $7.50 if they do go in the money. And then I will start selling covered calls on them just as well as Tesla. I'm perfectly okay. These are kind of cash grabs, but they're also, it's a cash grab mainly, but if I do get assigned, I will gladly take ownership of them, right? So let's get into the stocks I made in the last video of my favorite stocks to wheel, right? I got a list, going from CrowdStrike at 314 if you have a bigger portfolio, all the way down to SoFi at $8.64. So a nice variety, with most of them being in the 100s. Nice variety of stocks to sell cash secure puts and sell covered calls on if you have 100 shares. Tesla, big news coming in about 4 hours, around 10 o'clock Eastern Standard Time. They will have, Tesla is having its robo-taxi event. I will be asleep, but yeah, as soon as I get up in the morning, I'm going to be looking at it and watching a quick review of what they discussed and everything like that. But that is huge news. So right now, the implied volatility on these options is highly elevated because of earnings and this event. 80%. That is very high. I would say like 25, 30 is average for implied volatility. Anything over 40 though is pretty good for premiums. So 80 is like ridiculous. Also, Cloudflare, I was talking about this stock right here around the $80 mark, and we're up 15% at 92. So cash secure puts, you would have pretty much collected all that premium. That would have been a great trade as well. AMD, if I've already talked about this, it hit lows of 134 here and around 128, 130 there. So if AMD can get into the 140s, I would consider looking into it. 130s definitely, because looking at year to date, right? We hit 136, bounced up, hit low 140s, bounced up, and then the 130 and 130. So if we can get back down to the 130s, I would definitely be interested in selling covered calls, okay? And let's just say the share price right now is at 134. Let's just drop it. I would be looking at the you look at the delta, right? So this is a 0.30 delta on the lower left of your screen. Implied volatility of 54%. So when I'm looking at selling cash secure puts, right, I'm looking at implied volatility at bare minimum above 35%. That's really what I shoot for. 35%, 40% plus is perfect, but I will take 35 at the bare minimum. So this checks off that box. And then I'm looking at the delta, 0.3, right? And, most people go for 0.2 deltas. I'd say it depends on how oversold is the stock, right? Like right now, if you look, stock has been kind of going up. And actually, it's at a pretty decent high right now. It went from 172 to 164. So I wouldn't really be looking for like a super high delta because it's too high right now. I would wait till it comes probably right around these like 140, 145-ish mark, 140, 145. Then I would start selling cash secure puts because then I know at least we're at a fair, we're getting closer to this fair price, like 134 or 130 being the bottom here. At least this is what the trend is saying. you know, it hasn't hit lower than that since what, the beginning of the year. The 128 was the absolute lowest. So if we break 140, I'm no brainer. I'm selling cash figure puts on this, probably around the 130, 135 mark. And if it's that oversold, if it comes down to here, I would be selling a more aggressive cash secure put, right? So I know it probably, most likely, is not going to fall much more. If it does, you take ownership of the shares at a pretty fair price, right? Pretty good price. So you look at the deltas. This is 0.23. That's more of a conservative delta. I would say 0.2 is conservative. 0.25 is where you get a little like conservative with a touch of risk. And then 0.3 is like, I would say that's where the risk starts to come on, and 0.35 would probably be the most I did. Unless I wanted the shares at that price, then I would sell it probably at the money just to collect the most premium possible. Just in case the share price did bounce up, at least I would collect the most premium possible rather than selling it still out of the money and not collecting that as much premium as I could have. So if you look at the money, well, I guess it's $4.50 out of the money. 0.39, it's a little too aggressive. Come down here, 0.3 delta. That would probably be something I would be interested in selling. Something like that. It's a 0.3 delta. The stock we're pretending it's at 134 right now. So this would technically be what? 125 strike if we minus $30 off of everything. At a 0.3 delta, that would be something I'd be interested in selling. But since the premiums are very elevated on here, it actually looks like they have earnings coming up, because that usually happens during earnings time. Yes, so October 29th is earnings. So let's go to the 25th so we don't get that earnings bounce. There we go. All right, so, okay, so that changed the delta. Delta is now 0.24. Well, also, we moved it back a week, so that makes sense. So we are now October 25th. We're at what? 2 weeks and 1 day away. This would be the 0.3 delta. That would be something I would be interested in selling, right? Then we move out. Then if you get assigned, you know, you get the 100 shares, which is kind of what I'm hoping for Tesla, because Tesla's premiums are insane. And I really kind of want to get assigned here, because then I can sell covered calls and, you know, continue the wheel strategy. Always sell covered calls above your above the price that you bought it at. That way you never lose the trade. I mean, you can't lose if you sell covered calls above your share price that you bought it at. You can't lose. And that's what I'm really looking for. Like, for instance, Nvidia right now, I mean, look at this. We're trading too high right now on Nvidia. I would not sell covered calls. I mean, I guess if you already own the shares, I would sell covered calls, right? That's what I would do. If I already own shares, I would be selling covered calls right now, probably at like 145, 150, maybe like 3 weeks out. But if I'm going to sell a cash figure put, I'm going to wait for it to get like, maybe not like bare bottom at 102, but like right here, like 115, 113, somewhere like close to the bottom, but not all the way close. That's when I'd start wanting to sell some cash secure puts. And for me personally, I think anything under 110 on Nvidia is a steal. I think that's a great price for me personally, right? So if I see it getting down to 115, 113, I'm immediately opening up the trade options, right? Gonna go a month out. And I would be looking, since it's already pretty low, I would probably looking for a 0.3 to 0.35. And that's because it's only $3 to $5 away from what I think is a good price to buy it at. That would bring the PE ratio down to like a 50. I think that's a pretty fair, considering how much growth they still have. That would be something I would be interested in. So there you go, boom. First one I open up, 0.34. That would probably be something I'd be interested in selling. So, what is it? Almost $5 out the money? But now if this is like, you know, $20 downwards, right? Instead of the share price being 134, let's just say it's 114. So this would be a 110 put. and you'd be collecting less premium because the share price would be cheaper. Let's just say you're collecting 250 or 275 instead of the 375. Collect 275, and then boom, you buy it at a pretty decent price. That's what I would do. I'm not selling cash secured puts on stocks that have already ran up. I mean, look at this, 22% in a month. I am not selling cash secured puts on this. Are you crazy? No way. I mean, you sell cash secured put at, let's just say 125. That stock is probably going to go down to 125 pretty quickly. And I'm not one to own it at 125. I'm wanting to own it under 110. That's me personally. So you sell this 125, you're going to get $233. And since it's a 125 put, you're putting up 12,500 collateral. You're looking at almost a 2% return. You're looking at like a 1.85 roughly. 1.85 in, what's today, the 10th? I'd say it's, about 3 weeks in one day. You're looking at an almost 2% return. That's pretty solid, but there's a very high chance that this is going to go in the money. If you look at the delta, 0.23. Yes, that's conservative, right? But if you're selling at a 0.2 delta when the stock is trading near all-time highs, it's not as conservative as you'd think, because the stock is trading all-time highs, so there's a more likely chance of it pulling back. So if you see the 0.23 delta, and then you look at the chance of profit, 77%, you add that 77% and the 0.23 delta, and guess what? You get 100%. That's kind of how it goes. You see the chance of profit's 80, so I'm going to go ahead and guess this delta is around a 0.2. Look at that. On the money, 0.2000. And that's just how it is. Chance of profit 85%, delta's most likely going to be around a 15. There you go, 14 delta. So that's kind of how you can gauge that as well. So if it's oversold, I'm looking at a chance of profit around 70%. And if we're kind of slightly above oversold, I'd probably look for maybe more of 74%, 75% chance of profit, aka 25 delta, or near 27. That's fine. Something in those boats. But that's how I judge it. So like right now I'm staying clear of Nvidia. It's ran up too much for me to sell puts on. It's ran up too much for me to buy shares. I'm not buying at all-time highs. I refuse to buy high and sell low. I'm not going to be that guy. You can be that guy, that's fine, but I'm not going to be that guy. But yeah, so I do not sell covered calls unless my cash secure puts get assigned to me. Okay, I'm mainly focusing on puts right now. Or let's just say Nvidia crashes 20% overnight and Nvidia gets down to 102, I'm probably not going to sell a put on Nvidia. I'm probably just going to buy the shares. Like outright, I'm just going to buy the shares. And I'm not going to sell a covered call if it's oversold. Let me get into that real quick as well. If I'm looking at this chart, right, and Nvidia is at the top, you're going to, I would sell covered calls. That's where you're going to want to sell your covered calls. If Nvidia is all the way down at the bottom, right, you see it go from 128 down to 102. You don't want to sell covered calls at the bottom because, yes, it could keep crashing, but if there's no news that caused this, like, oh, their growth is gonna get cut in half, blah, blah, blah. If there's no news that this happened and it was just a sell-off, I believe this sell-off actually was the CEO's insider sell. I think it was right here where he sold 5.3 million shares. He already had that planned out a year ago to do this. This was no news. Like, he didn't just do this because he thinks his stock's overpriced. This was a planned thing over a year ago, just so he could have some capital. But you don't want to sell covered calls when the stock falls 20%, right? You don't want to sell that because then their covered calls are going to get assigned. You're going to lose your shares pretty quickly. You want to take advantage of some capital appreciation, right? So once it goes from 102, maybe like 115, 120, then that's when that's when I'm gonna want to think about cover calls. Like, okay, cool. I've got this quick rebound. I mean, look, you see how fast it falls. Look how fast it goes right back up. Look how fast it falls. Look how fast it goes right back up. You don't want to miss this little bounce from August 7th to August 13th. You don't want to miss this bounce. We went from 98 to 116 in what, 6 days? That's almost $2,000 of capital appreciation. You're not gonna wanna miss that. But then once we complete this bounce, see, we got to 117 and we fell. Once we get back to that 117, that's when I'm gonna want to sell these covered calls. That's when I'm gonna want to do that, because then we're hitting the previous resistance of where we crashed, and yeah, we could go back up, or yeah, we could not. But that's when I'm gonna want to turn the covered calls on, is right around that 117. I'm not gonna want to turn them on as soon as I buy these shares at $98. No way, Jose. Because if I sell 110, I would be so, look at that. It went up to 130. I would be so deep in the money. It's not a good idea. So what I'm going to do is I'm going to take that advantage of that quick bounce within a week. And then as soon as we get close to this 117 or at this 117, I'm going to turn on some cover calls. And depending on how far in the money you get, if you get too far in the money on your cover calls, I'm going to be probably just biting the bullet on that. You could always keep rolling it and keep rolling it and keep rolling it. But I guess it just depends on what you want to do. I feel like you're not going to, if you're so deep in the money to where you'd have to roll out like over a year just to get out of the money, it's probably not worth it. So that's something that I would be looking just to bite the bullet, take the shares away from me, and start a new trade with maybe a new stock, or maybe keep going on that stock. But if you guys have any more questions about that, let me know. I feel like I've been rambling on a little bit. But if you stuck with me this far, comment below what trades you guys are doing. I got a couple comments on my last video. I really appreciate them. I love communicating with you guys. I love seeing what you guys are doing. And yeah, peace.